Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday. Let's take a look at some charts. Not a lot of happiness out there, but we'll go through it. A few gems in the middle, some bullish eye bleach, and then a lot of bearishness across the board for the BTC ETFs. More negative outflows last week to the tune of 739 million. Some of this could be basis trade stuff still, but not a good look. You know, it's obvious when we have positive flows, price tends to go up. It's not one-to-one. It's not perfect, but it's a good sign to watch. If we see a new lower low in flows, if we see a higher low in flows, if we see behavior change and flows flip positive on a week, these are things to watch for in a bearish period. Outside of price, we could see divergences. Many people this week have talked about divergences between equal weighted S&P and the S&P, for example, as an obscure divergence that's happening right now. RSP didn't make a lower low, whereas S&P did, whatever, right? Those are the types of things to watch for, but nothing's going to save you here. When it's a macro risk off, anger across the board, futures opening down tonight, unhappy with daylight savings time, obviously. We got to lock the clock, people. So anyway, flows, negative. Drawdowns, if we're looking at this chart, probably not in a good spot. Historically, we have survived realistically drawdowns of 25 to 30%. Now, you don't know the cycle's over till it's over. I don't personally think the cycle is over. We'll take a look at the weekly key June. Historically, the cycle was over when we were below the weekly cloud. We're far away from that. As ugly as this looks and could look, it's really hard to say the cycle is over. Now, before the diminishing returns, people let me know in the comments. Yes, I know. DRs are a thing. I get it. This could be an extended cycle. There could be no more cycles. Think about it. Cycles could just be over. We could have a fat recession and then go on our merry way. I don't know, right? We haven't lived through a recession technically on the BTC side outside of COVID, and they came in real quick. Back to this idea of waiting until the printer gets turned on. We could have drawdowns significantly, and then they turn on the printer, and then the party starts. I think a lot of people got a little too gung-ho in front of the printer being turned on. By my estimation, the Fed is unlikely to cut until May. I don't think they're going to cut on the 19th. Jay Powell was talking on Friday. He said the economy's fine. There's no rush. Okay. I mean, there's what Powell thinks, right? So we're not getting a cut in March. There's no meeting in April. So we got to survive till May, unless there's some forward guidance earlier than that. But again, nothing's going to save you here. And we're currently around a 25-ish % drawdown still at the moment for all-time highs for this cycle. Are we on thin ice? I don't really think so. I think we're okay. It's the alt people that are really killing the vibes, because the alt people have been in a bear market since December or earlier, and their drawdowns are 50% or greater. Or they're sitting in coins that just haven't moved in years. Okay, so that's definitely going to kill the vibe. Looking at Bitcoin relative to the cycle low, we are underperforming every cycle. That is clear. Again, DRs. I got to say it. Otherwise, I'm going to hear about it in the comments. That's fine. I get it. DRs still possible. It's also possible we snap back. It's possible we dip back to 70 and then snap to whatever. But you have to live through that to know. And if you're bearish today and want cash to buy the low and you don't have cash, then you need to get cash to buy the low, right? You can hodl on. Hodl stack's going to be fine. It'll be there, recession or not. But I think the traders are certainly preparing for lower lows here eventually, especially if legacy gets angry. Again, all bets are off. All bets are off. The books go thin. Prices go low. This isn't to scare people. Like, this just is what happens, right? Gold goes down on days when we have anger in legacy as well. It's not just BTC, but we're certainly underperforming the previous cycles. And then since having, we can look at this chart. Yes, we're underperforming by a lot. We're underperforming everything, but we also overperformed pre-halving thanks to the ETFs. So I don't know if this is even that valid until after the next halving. We also got the power law, which I think is fine. I see people making fun of the power law. I mean, we're in the middle. Like, what do you want, right? We didn't break below the support, which is currently at 38. I don't think we're going to 38. The midpoint here is somewhere around 90-ish. Okay. Upside target gets higher the longer this takes. So yeah, let's just chop around, right? What does it matter? It certainly doesn't feel like we have had similar euphoria as somebody who's lived through it. Doesn't feel like similar euphoria from 2013, 2017, 2020, 2021. This was a slow grind. This is a multi-year slow grind. So you can call it a bubble, but it really wasn't quick. It wasn't just straight up forever. It had many periods of reconsolidation. But again, the DR crowd will let me know that there's some sort of, inverted parabola thing that we're hitting resistance on right about now. Also want to take a look at fear and greed real quick. It is in greed, but again, this isn't going to save you. It certainly didn't save anybody in 2022, right? It didn't matter. It certainly didn't save you in 2018. Didn't even save you pre-COVID. What matters now is if we can recover. That's all that really matters, and we have to live through it. But the single indicator isn't going to help you. Funding going from negative to positive isn't necessarily going to help you. We've certainly washed out a lot of the leverage, a lot of the nonsense at this point, and we continue to baptize these people every day who keep trying to long on high leverage. So to me, what it's going to take to push us lower has to be legacy. It has to be fear on the macro side, because yes, BTC is leveraged, but it's not as leveraged as it was at 90. It's not as leveraged as it was at 100. So it's going to take some significant spot selling, and that's where the ETFs come into play. That could be one place where that happens. Not for nothing, we gave 100,000 coins to people from Mt. Gox, right? Some of those people probably looking at this thinking, yeah, maybe this is my time, right? We're going to have to eat through that as well if they haven't already sold pre-election. That's why you have to rely on a system that is yours and that you trust and that you've traded and understand to really know what to do here. Before I go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro, the link in the description of the video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Paired Ventures Inc., PBI, DBA, Kraken. A lot of people ask me, what do I have? What am I holding? I'm holding BTC, holding some ETH from like 3,600 via ETFs because the stop got blown past and I haven't had the courage to close that. And then mostly cash, mostly short-term treasuries, and a few other small speculative positions in legacy, but no alts, I can tell you that. None. Zero. I'll tell you when I start trading SOL or ETH again in a bigger way, it's not going to be anytime soon. And anything outside of that, it's probably going to be 3 to 6 months at least. If this is the cycle top, which again, I don't think it is, but if it is, alts aren't safe. If we've got a recession coming, alts aren't safe. So no, I'm not going to be trading in and out of alts here. Personally, doesn't mean you can't, obviously, dear listener, but it's not for me. Looking at the daily cloud, not great. Not great. Bearish things happen below the cloud. We've closed below the cloud today for the first time since September. So we had the move. We had the bearish breakdown. The cloud definitely was correct here. We can say that it got you in and then pulled you back out and then got you in again and then pulled you back out. Okay, but in the end, it was correct with the bearish edge to edge here. At this point going forward, it is very tenuous because this could be an extended chop fest beyond what we've already seen to 70. We are out of the protection of the cloud and we are in bear territory. We are below the 200-day not shown. We are below the 20-week, the green line there. We are hanging on by our chinny chin chin at the yearly pivot at 80. But after this, the next levels down are in the 70s. I doubt we randomly stop at something like 76. It just, to me, that wouldn't make too much sense if this keeps going. So is it bullish here? No. Bullish is 100. Bullish is 95. That's bullish, which could happen. This could be the stone cold low. But today, as we sit here today in this video, it does not look good for BTC. It does not look good at all. First step's going to be reclaiming the cloud here, and then we can talk. But not until April is when we could see a move back above the cloud again, somewhere around 91. That's kind of just a guess. It's not some sort of exact call, but if we look at where the cloud would be the thinnest or where this could recover the easiest, 91 would be the level. Now, you would think US announcing an SBR would be bullish, but it wasn't. Obviously, they didn't announce any net buying. Okay, fine. Markets got angry on that. That may change down the way. That may change the mood of other countries down the way. But again, as we sit here today, this is what we got. 4 days of essentially straight down after the SPR announcement. So 91 on the daily in April is definitely the level. If we go to 70 in March and then back to 91 in April, fine, right? But you have to be able to sit through that if you're going to hold through that. If we look at the weekly cloud, 74-ish would be the weekly key June. And at that point, if we don't survive 74, then to me, we can start seriously talking about end of cycle stuff. If we scroll back to 2017, we never really even got that close to the weekly key June, as well as the weekly 20 moving average, and we're already below that. In 2020, never got close to the weekly until basically the end. And the last time we've tapped the weekly key June was the yen carry trade unwind stuff in August 2024. We were setting up for a great weekly tweezer, and it just wasn't meant to be. So as we stand here now, 74 is the last line in the sand, really, after 80, because we do not want to live down here in the no man's land below the key June, above the cloud. It's a long drop below a level I won't even say out loud, but it's recoverable at 74. That's the thing. It's going to be slow. It's going to be a process, or it's going to be a wick like it was in August. But what you don't want to see is continuous bleeding, basically what we've been seeing over the past couple of days. There's probably also a case to be made for some sort of trend channel that's intact still and will be intact all the way down to sub 60, but we're getting closer to the midpoint here. So it'll be another level to watch in the mid 70s to see what happens. But nothing else is really left. I mean, we don't really have any supports here in between 70 and 80 outside of the weekly key June, outside of this midpoint of the pitchfork, which to me looks real because of how many times price has either resisted or supported here since 2022. So that exact level currently would be 75 to 76, somewhere around there. And outside of that, if we're talking alts, there really is not anything that I see that looks bullish. Ripple still is on head and shoulders watch. If this breaks down, it'll be one of the last remaining neutral charts to lose levels. Up until now, since December, unlike most alts, Ripple has held flat, has held sideways, below $2, and the measured move is 118. I can't imagine why it would stop there, though, but that's the level based on the measured move. I certainly don't have any bullish ideas there. One other thing on BTC, if we go to the 4 hour, I've been watching this over the past couple days. The 4 hour cloud has been bearish since February. It's still bearish, still bearish, still bearish, still bearish. So above 88, above 88.8, then we can start to talk again. We had a little excitement over the past week. All of that has failed, obviously. So if we can reclaim that and flip the cloud on the 4 hour, that's a tradable setup. But so far, it's been down. ETH flirting with sub 2K. I had said on Twitter yesterday, maybe this is some sort of diamond attempt. The trade there would be a new higher high on a daily close, in this case on a 4 hour, whatever time frame you prefer. 2250-ish would be the level. Didn't quite happen there yet. Is this a bull div? Not really. Is it a bull div on the daily? If we go to the daily, kinda. I'm just looking for a lower low in price and a higher low in RSI. So yes, that would qualify as a div that is starting finally for ETH, because up until now, you've had lower lows on lower RSI. Now you're getting a lower low here with a higher low in RSI. Is that going to save you? No, but it's a good sign that we're starting to see some bearish exhaustion potentially. And this daily cloud is not where you want to be. Bad things happen below the cloud. That's the title of this video. And since breaking down, 35%. That's after breaking down. So that's what BTC could have in store for it. Not necessarily percentage move, but just directionality is crystal clear here. It is not the expectation that we are bullish until we're back above the cloud. The expectation is more down. Same thing with Sol. Sol is down 35% as well since breaking down. Pattern played out beautifully. We're in the wheelhouse of expectations here for levels where we may start to see some support kick in. 3-day, weekly, again, it doesn't look good. It doesn't look good for Sol. It does not look good in the weekly cloud there. Below 110 on a weekly close, and it might just be good night for the cycle for Sol. So I would definitely watch that one. Set an alert for myself. Not someplace you want to be. I don't hold any Sol, so let it go to 0. What do I care? But certainly not bullish, not in bullish territory. And the rest of these, there's just nothing to say or do. They all are below the cloud, ADA, below Doge, far below. You're getting, again, that parabolic puke to the downside. You could measure this like this and just wait for anything that's a higher high and then pull the trigger with a stop loss at the lowest low. It just still feels a little early to me. You don't have to do anything here. You can just sit out, SWE below the cloud, ugly. LTC was another one that held out for quite some time, sort of neutral. That's below the cloud now, below 100. And it doesn't get better the further we go down the list. It just doesn't. There's really nothing we can look at here that's going to save you. Now, Monero, sure, it's a stable coin and or going up, but it will underperform in a bull. It will shield you from some downside in a bear. That's about the best you can expect. EPTC still very bearish. Still very bearish. Some divs kicking in here a little bit. Lower low, higher low in RSI. Okay, there's that for you. That's going on. Sure, has been below the cloud for quite some time on the daily. Link below the cloud. Bearish puke, and I think you get the picture. Trump as well, also breaking new all-time lows at 1050. So there really is not anything anywhere. I mean, just look at this list. It's very red today, very angry. ETH beta is angry, Sol beta is angry, layer ones are angry, lots of anger. I don't see anything that looks bad enough to buy just yet. To me, I would certainly want to see some sort of bottoming process because even BTC has been plus or minus 4,000 USD notional. So that's going to swing alts all over the place. It just is what it is. It's just not the time. Now for some bullish eye bleach. Oh, sorry, I forgot Tesla. I was going to say if BTC retraced to 70, then it would be like Tesla has already retraced the entire breakout move since the election. Right. This could be what's in store for BTC. Tesla's actually down more than BTC is from all-time high, not all-time highs, but the drawdown is more than BTC. All right, back to the bullish eye bleach. If you look at the 40% of the 60/40, that's AG, that's AGG, it's an aggregate bond ETF. Does this look exciting or is it going to blow your hair back? No, but it is bottoming over multiple years, starting to make higher highs, has made a series of higher lows. It's above the weekly cloud. Fine. It's a decent trade where there's not much else going on the risk side of the equation. Now, most people would rather just sit in short-term treasuries, I think, than like try to fool around with more stuff and trade bonds, but it's a chart. And if you want to get really wild, this is the 3x 10-year treasury ETF, TYD. If you are of the belief that they're going to continue to bring the 10-year yield down, this idea may play out. This could end up as an inverted head and shoulders moving to 28, 30. These leveraged ETFs are for the big boys and girls, so be careful with this. You don't want to be holding this for a long period of time. You will get vol dragged all over the place. There are fees with this, et cetera, et cetera. But there's always leverage somewhere. And why not, right? Sure. I think it's a little bit early, but something to keep in mind where not much else is going on. KWEB, same thing. Is it late? Is it early? I think it's somewhere in between. You've had confirmation of breakout a couple times here, and it looks okay. It's, again, years bottoming. I tried to trade this a few times to the long side, didn't really go anywhere. And this is probably a conservative target if this continues to break out, but it may start to trend bullish on high time frames. And if we compare Chinese tech to US tech, CQQQ divided by QQQ, that's a scary chart because this is a bullish breakout for CQQQ after a multi-year drawdown relative to US tech on a high time frame cloud with a series of higher lows and a series of higher highs and an inverted head and shoulders over multiple months. It it looks good. So we'll see how this looks in 2026. But the technicals for this look significantly more bullish than KWEB and certainly look more bullish than QQQ. There's also some gold stuff. This is GDX, a little bit of a cup and handle situation going on here. Looks okay, right? Again, you don't have to love it. You don't have to trade it, but it looks better than alts. It looks better than the indices. It looks better than Mag 7, and it's something to do if you're one of these people that just has to be trading. Now, if we look at the DXY, you would think crypto would be doing better. You would think risk assets would be doing a little bit better. Maybe we need the DXY to go below 100 till that kicks in. But hear me now, quote me later. If the DXY breaks down to 92, you would think BTC would be well past all-time highs at that point. Previous bull markets have all seen DXY declining from essentially 100 to 90. And it's possible that that won't kick in until we break this multi-month range that we're in, multi-year range. You've got some arguing that the dollar is weak because it's capital flight, it's recession fears, it's growth fears. Okay, fine. But I think the end result will be the same eventually. It's just how much pain do we have to eat in front of that first. As for the SPY, same thing with weekly levels on the cloud. 550-ish is the level. If that doesn't hold, it's 500. Those are also yearly pivots. The current zone that we're in is an old cup and handle target. We've just been sitting here for 6 months. So the weekly is still fine, which is good for crypto. But if we start to roll over like we did in 2022, then that's cycle ending stuff, right? Because that's going to drag crypto with it. S&P on the daily also flirting with a breach of this multi-month channel that it's been in. It's below the cloud. It has a bearish Kumo twist there. And the next best place to be long is always going to be a bullish Kumo breakout with a bullish cloud. We are far from that on the SPY. I put in these big green arrows just in case you couldn't see it. On the Qs, same deal. We were in that old cup and handle target for a while. Yearly pivot, weekly key June, 470, 480. On the way down, it's 413, 424. If things get really angry like 2022, then yes, that is probably cycle over stuff for crypto. And if we look at the Qs, same story. Best place to board the train is going to be a full cloud reset or bullish TK recross price above cloud. You had your TK recross price above cloud a couple times. You had an attempt at a continuation, and then Trump tariffs happened. So at this point, everything has been reset. There's no bullishness on this chart any longer. So the next signal will be easy. There's no guarantee of continuation, obviously, but the next signal will be easy. Now, as far as the other leveraged momentum, crypto adjacent stuff, MSTR is still very much in a downtrend. You know, you can justify this all you want, but ultimately it's below the daily cloud. It's completely bearish, which is great if you're not in MSTR and you're looking for the next signal. It's terrible if you've been holding since 500. It's terrible if you're holding options. Okay, that is not going to help you unless they're options with a bearish expectation. But there's nothing here that looks bullish. Yes, it is super volatile. Still, it is plus or minus 10% on any given day. Fine, but it is not in bullish territory. And that won't be the case probably until 350. 350 would be the level on that one. WGMI on a high time frame cloud also just doesn't look good. Hasn't really traded well in a while and is starting to break down in a big way as a group. One thing to watch for is if miners are holding a bunch of BTC and they're not hedged and they're reliant on the treasury, they're in trouble if price goes down. I don't know which miner would be doing something so silly as that, but it's possible. And that's not good for spot because it's going to pull spot lower as well as they sell those coins. But this is in no state of bullishness at the moment. Coin, same deal. Hasn't really traded well. Has traded more like ETH. And ETH has not been bullish. Is this recoverable? Sure. It's just not in a good spot. We could say there's a diamond bottom on low time frames. Okay, fine. But I'm guessing on the overnight, it's down, as is Hood. I think Hood was down 8% on overnight. And like I say with alts, Hood was up 4x since 2024. What more do you want, right? What more do you want? Same thing with Reddit. This is on linear just for dramatic effect. What more do you want? It was up 6x at some point or more. I mean, what more do you want, right? Now I think it's down 40% from the highs. So it's going to take time for this stuff to recover, to wash out all of the momentum people. I wouldn't expect this to magically just shoot back up to all-time highs, and Palantir's another one. Doesn't look bullish. It's rolled over significantly, closed the gap. What more do you want, right? It went from 20 to 120 in like 8 months. It's probably better to find trades elsewhere than forcing momentum trades on parabolic advances that are breaking down. Just my 2 cents. So what do I want to see from BTC this week? I would love to see a reclaim of 89. I would love to see ETFs come in and be net buyers instead of net sellers. And I'd love to see SPY or the Qs find some courage and some strength. I just am very doubtful we're going to see any of that this week. So long as Orange Man is out there slinging the tariff rhetoric. That's all I've got for this one today. Like, dislike, comment, share, subscribe, and happy trading.